Hello and welcome to News Now with me, Ankur Mishra. Let's get started with CPI numbers. Retail inflation in April has edged up to 3.48% versus 3.4% in the previous month, hitting a 13-month high. The uptick was driven largely by stubborn food inflation, which rose to 4.2% from 3.87% in the March. But if you talk about the core inflation, that had stood steady. And joining us to help out the CPI data into perspective is Indranil Pan, Chief Economist, Yes Bank, and Rajni Thakur, Chief Economist at LTF Finance. Welcome. My first question to you is, Rajni, with the number of 3.48% and fuel prices hike, which is anticipated by the market, how do you read this number?
So to many of us in the market, this is actually a number that brings in a sigh of relief. We were working with an assumption of 3.8 plus inflation number for April. Do remember that, the global prices in the month have risen anything between 50 to 60%, and the price for Indian crude basket was up around 90% in April. The fact that we've still managed to stay beyond 3.5, just below 3.5%, is actually a welcome relief. Gives us some time to kind of absorb the global changes, dynamics, and then have that space to react to higher inflation number. Having said that, the fact that there are price pressures building in the system and there is some price increase imminent in the economy, that's kind of visible from many signals.
Right. Indranil, I want to understand from you the numbers and especially the food inflation, which has stood at 4.2%. Do you think is still in line?
I don't know if what in line you are really talking about. And going forward, I think the stress test for the food inflation would be more the El Nino and how it impacts the production in the Kharif season. As of now, if I really look at the cereals on the FCI go downs is pretty comfortable. So the government has the capability of addressing food inflation if it is coming from more the cereal side. The concern, of course, and in most of the other years where we have seen stress on the food side, it has more come from the perishables, which is the fruits and vegetables. So that's something that we will have to sort of understand as we go forward, given the fact that we also have had a heat wave across the various regions of the country. So at this point in time, as I think Rajni pointed out, it's a sort of relief that food inflation is standing steady, more or less sort of in line with the sort of the previous month. But going forward, we'll have to sort of understand the dimensions of the food inflation.
Right. And talking about the core inflation, Rajni, you think that is again a cause of what I would call resilience, or you think there is a sign of worry which is already there in the numbers?
So at this point of time, I think we need to dissect that what are the major drivers of inflation or inflation expectations going forward, right? I mean, there is some price pressure building on the food part of the CPI basket. There is definitely some price pressure building up on the fuel price of it. And the other big element on the whole list of CPI breakdown that you see is the precious metal. And that was a surprise, I mean, April was the month where we saw some softening of precious metals, but in the CPI numbers, we still see gold, silver prices as one of the key drivers. So to that extent, what's driving inflation at this point of time is not really core demand pressure. We really don't see that as a cause of concern. But all the volatile components, food, fuel, and precious metal kind of remain volatile and on upward trajectory. And that creates the risk on price pressures.
Right, and silver is something which has actually shown much of an increase if you compare, especially in the month of April, more than 160% is what the numbers are reflecting. But after Prime Minister Narendra Modi has given an appeal to citizens, you think there is going to be some softening? What is your reading in the need?
I think the critical issue is not in terms of how much of gold imports are coming in. He's more talking of the gold import side, and the extent or the volume of imports, in my opinion, does not have any implication for the gold prices that we factor in within the CPI. I think the bigger issue within the core, if you really look at the area which has actually seen quite a sharp rise, is the inflation on the restaurant side, wherein on a month-on-month basis, the previous month was 0.36 and now it is 1.5%. On a year-on-year basis, it is 2.9 and that has jumped to 4.2%. Now, these are some of the areas where the policy on the policy side, the government has allowed for an increase in the price of commercial LPG, and that is possibly what is getting reflected at this point. Going forward, we will have to understand from a core basis whether the government is willing to pass on some of the implication of the higher crude prices onto the end users in terms of the petrol and diesel price increases at the pump head. And that could have a bit more sort of wider ramification in terms of how we look at the core inflation. And that's the sort of area we have to sort of wait and watch the policy measures by the government of India. And that will get factored into the higher core inflation.
Right. Rajni, I also want to understand some of the constituents like motor car and Jeep, air conditioners. Of course, even the last month there was some softening. It is continuing even now. But do you think this trend is going to stop because many of the companies are going to hike prices and announcements have been made? So you think that the numbers which are yet to come later this year will not have this cushion?
So see, the prices are increasing, the input prices are increasing across different industries, right? I mean, be it fuel, be it base metals, be it any other industrial input, we are seeing rise in prices globally and in India as well. Now, the question at this point of time is how much of it is being absorbed by, let's say, an OMC or these firms, and how much of it is being passed on to the customers or consumers. Somewhere in the year, these price increases will have to be passed on. The best case scenario for us is an early resolution of global volatility and probably, a quick revert to base oil price projections. If that doesn't happen and if kind of keeps extending, we will see some pickup in inflation across different consumer segments for sure. In fact, the base expectation of CPI for the year has already increased by around 30 to 50 basis points across the board.
Right. One final word from Mr. Indranil before we let you go. What do you think Reserve Bank of India will assess the situation, which is again ever changing? We don't know whether or not fuel price hike will happen very soon. How does the data look from RBI's point of view?
Well, I think the RBI is really challenged in terms of how to look at this scenario, because what we are talking about today is a falling growth. So they have to assess what is the extent of fall in the growth that happens versus the rise in inflation, which is anyways expected even from their own forecast perspective. But having said that, I think the MPC also clearly brings about the fact that there should not be any policy mistake and misstep. You should not be hiking before time, and you have to be careful about that. And so also holds true for the cut. So my own perspective is that the RBI would have to be sort of absolutely glued into the inflation dynamics. They're going to watch the inflation expectations number and figure out whether any of the components that are increasing is getting entrenched into inflation expectations. And then only they will be able to take a call. And broadly, I think unless you have a very clear idea as to what the monsoons are doing and what the implication of that is on the food prices, because food prices in India impact the inflation expectations model much more severely than anything else. The call would be more back-ended into the current financial year. possibly, I think Q3, maybe a December, maybe a case in point when they have to decide whether they move the rates, either on the higher side, on the lower side, given what the implications of this West Asia crisis is on growth versus inflation.
All right, so interesting analysis coming in from our panel. Thank you so much for joining at this hour with your views.
Thank you.
With this, it's time to take